Hi viewers, welcome to the Fund Analysis channel. I'm Bijan, back with another mutual fund review in this series. Today we are going to review the Mirae Asset Hybrid Equity Fund. Hybrid equity funds are popular among the people in India because it provides growth while protect the investment from downslide when market turns bad. Hybrid equity fund or balanced fund invest in both equity and debts. Equity will provide long-term gain while debt will provide the protection to the premium in the long run. That's why hybrid funds return are better than the debt fund while less than the pure equity fund. Let's talk about the fund details. The fund is launched in July 2015 and relatively new in this league. This fund invests in equity and debt to gain growth and protection at the same time. 65 to 80% of the fund assets are invested in equity, while 20 to 35% are invested in money market like debts, treasury bills, etc. The expense ratio of this fund stands at 2%, which is little more than its peers, but I would say that it beats its peers many times. Hence, investors should not worry to give a marginal higher fund management charge. The asset under management is 2,196 crores, which is mid-sized fund. If you look at SBI, HDFC, ICICI equity hybrid funds, they are many times bigger than this fund. Currently, NAV of this fund is 15 rupees 47 paisa. This is good time to invest in the equity market as market is running low. Hence, I would recommend to invest during this time. The benchmark of this fund is CRISIL 3565. Let's see who is the fund manager for this. This fund is managed by three fund managers. Two fund managers manage equity part, while one fund manager manages the debt part of the fund. Nilesh Surana, Sudhir Kedia manages the equity, while Mahendra Jaju manages the debt part. Nilesh and Sudhir has more than 13 and 12 years of experience respectively in managing the equity funds. They both worked in ASK Investments before joining Mirae Assets. Mahendra worked for almost 25 years in financial field and currently heading all the debt fund schemes of Mirae. They altogether bring considerable amount of experience to manage this fund. Nilesh is BE Mechanical having MBA in finance, while Sudhir is a MBA grad along with cost accountant and chartered accountant hat in his educational background. Nilesh manages other fund of Mirae assets like Blue Chip, India Equity Fund, while Sudhir manages the Equity Savings Fund. Hence, I will allocate score of 4 out of 5 for this fund. Now, the peer category of this fund is very large and strong. There are big fund houses who compete Mirae Hybrid Equity Fund, and they are SBI, ICICI, and HDFC hybrid plans. In this category, the return usually capped between 8 to 11% compounded annual growth rate in 3 years of investment. This fund has performed well and remain as a top fund in the return grade. This fund performs well compared to its peers in 3-year time horizon. The current NAV for this fund is 14 rupees 42 paisa, that is better priced NAV, and it has not changed much compared to the last year. Looking from the investor front, a new investor can start investing in this fund with a minimum lump sum of worth 5,000 rupees. However, if he wants to do a SIP, that is systematic investment plan, where a person has to pay premium each month, he can do so with an amount of 1,000 rupees and he has to pay at least 5 SIPs. There is no entry load. That means all the money that is invested or all the money that the investor is going to put into this fund are used for buying the mutual fund units. No hidden charges are there. However, the exit load is 1% of the redemption value. If investor sells this fund within 1 year of buying, he has to give up 1% of his fund value. For example, a person has invested 5,000 in the plan on 2nd August 2019. If he wants to withdraw from the fund anytime before 2nd August 2020, then he will lose 1% of 5,000 rupees, which is 50 rupees as exit load. If investor withdraw his money after 1 year, there is no exit load. The fund is moderately risky, but return is above average. So anybody who has a moderate appetite for taking risk, he can go for investing in this fund. This fund can provide decent return over a medium term. Hence, I would put 4.5 in the scale of 5 for this fund. Let's look at the fund performance from the past history trailing return. Trailing return provides the percentage return that fund has delivered as of today over last 1, 3 or 5 years. The fund has consistently beaten the benchmark and its peer mutual funds almost all the time. 6 months return for this fund is 4.14%, while category is standing at 2.15% and peers is standing at 1.36%. For 1 year return, the fund has delivered 4.46% versus category has delivered minus 1.98%. Likewise, for 2 years and 3 years horizon, the fund has provided a return of 6.74% and 11.53% compared to its peers, which was delivering 2.16% and 7.18%. Over a medium term, the fund has generated good growth compared to its peers and benchmark. Let's look at the quarterly return for the fund. Only except the quarter beginning March 2018, the fund has beaten the benchmark and its peers. The fund outperformed the peers many times while provided a good return on March 2017 quarter. It has provided more than 10% return in March 2017 and December 2017 quarter. Even in the downturn period of September 2018 and December 2018, the fund has generated a return of 2.5% to 3.5%, which is pretty incredible. This shows the fund is quite resilient to the downside movement of the market. If we track NAV value over a period of time, NAV changes from 9.97 to 10.82 rupees between Jan 2016 to 2017, which is a decent increase of 9.82%. During 2017 Jan and 2018 Jan, NAV changed from 10.82 rupees to 13.84, giving return around 27.9%. But during 2018 Jan to 2019 Jan, fund has performed lower, but it has managed to pull out a positive figure of 0.65% return, while others were giving negative return. For example, if a person has invested 10,000 rupees lump sum in January 2016, the value of the fund would have 14,137 rupees during Jan 2019, resulting a good return of 13.97% compounded annual growth rate. Hence, I would rate this fund 4.8 in the scale of 5 on its past performance. Let's talk about the ratios of this fund. We will see standard deviation, beta, alpha, Sharpe, Shortino ratio for this fund. Standard deviation for this fund is 9.49 compared to its peers 10.20, which indicates the fund is less volatile. Standard deviation measures the change in the NAV of fund according to the volatility of the market. Beta also measures the portfolio risk. Higher value of beta is undesired as the portfolio will be risky. The fund beta is 0.87, which is less than 1 and considered to be good. But compared to its peers, it is more risky fund. Alpha is the risk adjusted return. More the alpha is, better the fund will be. Alpha for this fund is 0.61, while benchmark is negative 2.49. Hence, the fund has better return than the risk it takes. The Sharpe and Shortino ratio measures how much excess return has been generated for each unit of risk. The bigger the value, the better the return. The value of these ratios for the fund beats the peers and benchmark. Sharp is 0.66 and Shortino is 0.41 for the fund. Looking at the ratios, I will allocate 4.8 as fund performance over a scale of 5. Let's discuss about the portfolio of this fund. This fund contains 74% of its value in equity, 13% in debt instrument, while another 13% in cash or cash equivalent. In 74% of equity, the fund has invested in 61 stocks. Top 10 stocks contain around 41.6% equity value. If we consider 5 stocks, it contributes 27% of the equity value. The major contributor of this fund is financial sector, which contributes 28%, followed by energy, which is 8%, and technology sector, which is 7%. From 13% debt instrument, 9% of the fund value is employed in government securities, while 4% are invested in low risk grade NCDs and bonds. NCD stands for non-convertible debentures. The portfolio is comprised of some good large cap stocks like SDFC, Reliance, Infosys, ICICI, TCS, L&T, SBI, ITC, etc. The P/E ratio for this fund is 20.85, which is reasonably priced fund in this category. Others like SBI, Canara Robeco, Kotak Equity Hybrid Fund has a P/E ratio more than this fund. The P ratio indicates that how much you are willing to pay to generate a revenue of 1 rupees. More the P ratio, pricey is the fund. Hence, the price of this fund is less. In the debt holding, Government of India sovereign bond is 9%, while all other debentures are from AAA rated certificates, which company provides to this fund. There is a low interest risk, which is almost, you can say that guaranteed return is possible. Hence, I will allot 4.8 in the scale of 5 for this portfolio quality. With this, we have come to a conclusion for this video. The mutual fund scores 4.6 out of 5 scale, and this is a must-have mutual fund in your balanced fund category. If you are looking forward to an interest rate earning somewhere range around 11 to 13% over a period of 3 years, but not less than 3 years, then this is a must-have mutual fund in your portfolio. I would recommend you to invest in SIP rather than having a lump sum. Thanks for watching the video. If you like the video, please click on the thumbs up icon and also subscribe to the channel. Press the bell icon if you want to get notified when we release new product review videos. Share the video with the friends. Please leave the feedback in comments. Also comment if you have any specific fund to be reviewed in the future videos. Thank you very much. Bye for now, and we'll see you in the next video.